Well, hello everybody. It's Dr. Hank, and welcome to Age and Wealth Success. And you know what we do here? We help you real estate agents, brokers, investors, all in real estate to increase your business and your wealth. And with me today, you're going to just love this one because this is investing at its finest with billion-dollar investor Kent Ritter. And Kent, welcome to the show.
Thank you, Dr. Hank. Thanks for having me.
Yeah, I just love that you made it, if you will. You got lots of money. You focused on, your wife, your 3 children, and all under the age of 5. And, it's just awesome. Hands are full. And then you said, hey, I'm ready to give back. And so I just love that, and to help people to invest, put investors together, and to do a bunch of deals. And I know you love deals and doing that real estate investing. Yeah. And, I think I want to start at a more broader, and then we'll get real specific to really help people to be able to, reach out to you and to see if there's some investment opportunities. But basically, you're in multifamily investing. And can you share with us what is the positive social impact of multifamily property investing? So kind of, higher level on, hey, why is this good for society on this multi-family investing?
Yeah, no, I think it's a fantastic question, and it's something that we don't talk about a lot, but something that I really believe in is that. So, and you have to understand a little bit about the asset class that I work in. So it's very much what we call workforce housing, right? It's folks that typically as a family, they're making anywhere from maybe 40 to 60,000 a year. So renters by necessity, right? Folks that are likely going to be lifetime renters in a lot of these scenarios. And, there's a lot of the properties where people in that demographic live are just not quality properties. They were built in the 70s, 80s. They've been run down. Maybe the owners, because we're buying from these owners, is why I know, don't have the capital to keep them up, don't have the management expertise to really bring, or the desire to bring amenities and value back into the community, and aren't really engaged with the apartment to really create a sense of community. So I think the value that we can bring, and the way that I look at this, is that first and foremost, we got to go to like Maslow's hierarchy of needs, right? And one of the most basic needs is shelter. And so what we do is, in coming in and purchasing these properties and being able to infuse capital and fix them up, the goal is to create, clean, safe, affordable housing for America's workforce.
That's awesome.
And that's the first goal, right? Meet that basic need. Like, people should be able to live in a place that it doesn't have a ton of deferred maintenance, where stuff's falling off the walls. They should be able to live in a place where when they put in a ticket because their sink's leaking or something, people respond and get it fixed. Like oftentimes we'll take over these properties. It's happened twice in the past 6 months. These properties we've taken over where you get in there and there's like a backlog of like 20 work orders, because we go to the residents and say, hey, let us know what's wrong, because we don't want that stuff to fester. Well, it turns out the owner, he wasn't fixing anything. So we get these huge backlogs. So we come in, we fix everything right away. But it just shows like these properties were not being kept up. These tenants were not being treated, as they should be on just a very basic level. So it starts, I think, with that basic level of service, right? And giving them an environment that's clean and safe. It still maintains a level of affordability that they can afford, to still live there on their incomes. And we spend a lot of time on market research and demographic research to know what that sweet spot is. So that's kind of the first thing: clean, safe, affordable, right? And then it goes into more of like the qualitative things, I would say, of like, how are you managing the property? Are you responsive to your residents? Are you engaged with your residents? Are you creating a sense of community? Are you creating a sense of pride in where they live? Are you hosting events? Do you have programs to help people succeed? And those are all things that we're trying to do to help our residents be successful, and to add kind of amenities that aren't physical amenities, but are adding value. So whether it's language assistance programs for folks with English as a second language, whether it's financial literacy programs, whether it's giving kids full backpacks full of school supplies when they go back to school in the fall,
Awesome.
community gardens, lots of different things. But I mean, if you think of these folk, a lot of these folks don't have another option, right? I said that they're renters by necessity. We know how much housing prices have gone up, right? In Indianapolis, where I live, housing prices went up 15% last year, and they're on pace to beat that this year.
Yeah.
And so the ability to own a home is just getting further out of reach, right? And these properties, a lot of them are aging out because a lot of them were built 50 years ago. And so they need that capital infusion. They need somebody to come in and really care for them. And I think that's the service we're providing. And not that it's completely altruistic. I mean, our goal is to return value to our investors, but at the same time, I think you can do both.
That's awesome, Ken. And I think that's why you are so successful, is because you have that bigger picture on to really be able to serve and give back and help the community and help the people that are actually living there. And so I love that whole perspective. And that's why I wanted to be with you today and have everybody share that this investing. And I want to help everybody understand too, that you're all investors. All of us are. That you may own a home, that's an investment, a little stock, whatever it is, we're all investors, and you can actually play in this game that this fun area that Kent is in. And Kent, can you share with us, because I like to get real practical too. And, so we heard, hey, this is really good for everything. So it's a feel good and, you want to do it. And who would you say that, let's start out with the type of properties that you're kind of looking for. And I believe that you typically are looking for actually your niche is smaller properties. And so if we could talk a little about that, because at the end here, folks, that we're going to all be able to participate in this, and you'll see next steps on how to, you can be part of this, that, you don't need all the money to buy some multifamily, that again Kent can help with all of that, and you can be part of it. So can you kind of share with us, what is your niche and where could we invest with you?
So the first thing I'll say, just on the point of, you don't have to have all the money to go buy a big apartment building. Like, that was the epiphany that changed my life. It really was. It was this idea of, I came out, I sold a business in 2015. I had some capital, and I knew I didn't want all my eggs in one basket in the stock market. So I started looking at other ways to invest, and real estate was an obvious alternative. But all I ever knew was, oh, how do you invest in real estate? Well, you go buy a single family home and you become a landlord, because the only people I knew in real estate, that's what they were doing. Right. But you talk to them and none of them were happy about it. Right. So I was like, okay, well, that doesn't sound like a good option. So long story short, just learning about the syndication model is what changed my life and sent me down this whole different path to where I am now. And this idea that you can just pool your money together and buy bigger, better assets than you can on your own. And in doing that, you don't have to put all your eggs in one basket in a single property. You can diversify across multiple properties. So you get diversification for geography and different areas. And so anyway, I just wanted to, that was the epiphany that really changed my life and sent me down this path.
And that is awesome. And I would say, because I have a pretty vast understanding and experience with investing, and especially in real estate, that I would say the syndication model that you just indicated is really the hottest thing going on in investing right now. So you are really in the hot spot of, this is the way to do it. And so I love that.
And you know what? And it's hot because it just makes sense.
Yeah.
Like I don't, when I talk to investors, I don't view myself as a salesman. I mean, nobody likes being sold to. I view myself as an educator because I find if I can educate them in the right way, then just like me, when I had that epiphany, the same thing happens to them and it becomes a no-brainer. And they're like, wow, I can get all these returns and cash and tax depreciation and everything. And it's like, yeah, it sounds good, too good to be true, but like it's not. Right.
Yeah.
And so anyway, like to digress, I know you asked me what type of properties we're investing in.
Yeah, but I love it. I love.
Yeah, I mean, I just think it's really important because it was something I wish that I would have learned. I mean, heck, 10 years ago, right?
Yeah, right.
And so that's why like I do these shows, and that's why I started my own podcast, is because I want to tell people about this. I'm like, everybody should be doing this.
Exactly.
With me or with somebody else, but like you definitely should be doing it in some way, shape, or form.
Yeah. Can you give your podcast right now, since you brought it up? Can you give us what is that podcast so we can watch it?
Yeah, so it's called Ritter on Real Estate, and you can find it on anywhere you listen to podcasts, Apple, Spotify, Google.
Yeah.
And really the focus of the podcast is focused toward my passive investor friends out there, because I started out as a passive investor first before I started doing my own deals. Mm-hmm. And the goal is just to make us smarter investors so that when we're looking at sponsors or looking at deals or markets, we know the questions to ask. We can avoid the pitfalls that I made when I first started, because there were some. I lost some money in some deals. I don't want anybody else to do that. So that's the whole goal, right?
That's awesome.
Is to help people be smarter investors.
Yeah, that's awesome. And so again, it's Ritter, Ritter, and you can see Kent's last name there, Ritter on Real Estate. And so you can learn more there. One of the pressing things is, because again, I'm a mental scientist, so I know how most people are thinking on the negative or why they can't do it, and they kind of fight, if you will, for their lack and limitation. So I want to help everybody to understand. So to be a investor, like when you say investor, I think people are thinking like, gee, I need $1 million or whatever to begin, or $100,000 to begin. But, really like you shared, one of the first ways is you have to be educated. And once you're educated, that the money can come in different ways. But typically I know the bigger the investor, the better. But, for a lot of people out there, how could they kind of get involved with this? And what's kind of that price point, or what is the path in order to get with you to be able to take advantage of all these tax savings, profit, cash flow, things that all of us want?
Yeah, absolutely. So, the minimum investment is $50,000. Okay. And that can come from either your cash, that you have now, or it can come from, a lot of people will invest from their retirement accounts as well. And if you set up your retirement account in the right way, the self-directed retirement account, then you can actually invest beyond just mutual funds and things. You can invest in real estate. So there's multiple sources. Again, that's why it's important to be educated on where that money can come from, and obviously to talk to your tax advisors and understand everything. But the minimum is $50,000, and so it's not a huge hurdle. And it's something where you can kind of dip your toe in the water and understand the process. And what I find is, because it is so unfamiliar, there is usually a perceived risk that people believe, because it's just unfamiliar, right? With anything that's unfamiliar in life. But as I step people through the process, and then once they're in the deal and they actually see the process and they see the level of communication and the frequency of communication, I think people usually become much more comfortable with it. But the process really is quite simple, and in many ways aligns with just buying a single family home. As far as we will, we get a project under contract. We go through a month of due diligence, making sure that we're looking under every rock and, turning over every corner and making sure that we know, what we're getting into, and that we're comfortable with it, and that we've got, we're planning appropriately from a budget perspective. And then we offer that investment, to our investor network. And essentially what happens is our folks that are on our deal list, we send an email out with information about the deal, and then we'll host a webinar to talk about the deal. And when folks are comfortable, they can put in what I call a soft reserve, which essentially is just like holding your place in line. So you're saying, hey, I'm interested, and I'm interested for this much. You haven't committed any capital yet, but it just helps us gauge how much money is coming in, because inevitably we reach a point where we know we got to start putting people on a wait list. And so we want to know where we're at. And then what we do is these legal documents are put together with our attorneys. It's called a subscription agreement, and you'll get a private placement memorandum. And essentially what these are, just telling you all about the deal, all the risks of the deal. With any investment, there's risks. And then you sign up and you say, okay, I'm gonna commit this much capital, and in exchange for that, you get shares in the business that owns the property. And then as an owner, you get your distribution of the profits from the property when we distribute, typically on a quarterly basis. Then you also get your share of the appreciation when we sell. And because it's real estate, you get your share of not only the profits, but of the depreciation of the property, which is what allows you to offset much of your income, if not all of your income, while you're holding it, and not have to pay taxes on that income. It's very advantageous for folks.
Gosh, that's just amazing. And, and I want to also just help it's so simple, that process. And basically, you have it all set. And let's just talk about $50,000 for a second. That as of right now, because of the increase in homes, with many of the audiences, real estate agents, it only takes you're going to make on average about $10,000 per deal. So it's only 5 deals. And if you need to make 5 incremental deals, contact me. I'll help you easily with my lead program, mindset training, other real estate training, to be able to do 5 more deals. You can truly start to have this investment, and you start to, make money, have these taxes. And this tax thing, again, that when you start making a lot of money, like I tell my agents, once you start making 25 grand a month, that you're going to come to me and you're going to want some type of financial advisor, wealth maker, to help, wealth manager to, help you with that. Well, here's a solution on that. And by the way, taxes are probably going up.
Right.
And you can count on it.
and obviously, and disclaimer, I'm not a tax professional, but if you're speaking to real estate professionals, I mean, there's something that you need to pay attention to is just the real estate professional designation in the IRS, because if you meet those requirements, you can start to offset all of your income with your depreciation from your investments. And it really can be a game changer for folks that are real estate professionals and in the real estate business.
Wow. That's awesome. Yep. And that is for sure on how it goes. So love that, and I think we have the, process. And again, this is, just our initial time kind of talking about it, understanding it. What else do you think, Kent, that we should understand about what you do? I know your company, and it might be helpful to share that actually your company has, let's call it 4 divisions that you do. And it's with building, and then building from scratch on up, and these and big play, they can be big, huge, apartment buildings, whatever, to tax deferments, to different niches that you have, and so there's more to you or your company than what we're just talking. You're mainly focused on this, but what else is there that either you want to speak about the whole company for investors that maybe want to do others, or anything else that we should know about investing with you, and how this syndication model is so effective and really a way to build your wealth, which is my whole objective, other than helping others become their greatest possibility, is to build their business and their wealth. And this is a bingo on how to build your wealth. And you do it with Kent Ritter.
I appreciate that. So Yeah, no, I think it's important for people to understand a little bit about the strategy that we implement. So obviously we're going out and we're buying apartments, right? We talked about we're fixing them up, but what does that really mean? So so my particular focus is really on a specific niche, which is really focused on smaller to mid-sized properties, often owned previously by mom and pop type owners, where what I call them, they're undercapitalized, mismanaged, and undervalued. That's what we're looking for.
And
So
how many units is that typically? Would that be?
So I'd say under 150 units typically. Okay. And so small is relative, right? Because
that's why I wanted to know on what you wanted.
Yeah, but in that space in the market, there's really a gap in competition because your larger institutions, which bring a lot of the competition in these hotter markets, are going to look primarily for 200 plus units because they need the scale, because they have to deploy a lot of capital, right? And then you're more like mom and pops, or maybe folks that are kind of JVing or trying to do something. They're when they start to get over their skis a little bit, when they get into 20, 30 units typically. Yeah. So we operate kind of in that no man's land of like 30 to 150 units where there's just not as much competition. Yeah. You find opportunities to buy from mom and pop owners who are, and by mom and pop, I just mean, they're not professional apartment operators, right? A lot of people have a full-time job and they have it as a side investment. Many of them are focusing on maintaining occupancy, not maximizing revenue or income, right? So I can tell you of the 5 deals I've done over the past year, 3 of them were bought from these mom and pop style where 100% occupied, but $100 to $200 below the market in rent. And so that's just a home run from our perspective, because it's not a big lift from a construction perspective. Yeah. It's really just coming in and managing the property in a way and getting those rents to market. And you can create tons of value in doing that. And the less construction work you have to do, the lower the risk on the project. Yeah. So we love those. So we're focused on finding those kind of properties throughout the Midwest. Okay. And I'm Midwest focused again, because my strategy is not to chase the shiny new object or the new hot market and try to go to Phoenix and think I can be an expert in Phoenix. Yeah. I'm in Indianapolis, and so we focus in the Midwest because there's a ton of value in the Midwest. Yeah. And if you want yield-based investing, right? If you're focused on value investing and yield, you can't beat the Midwest from a market standpoint, meaning you're going to have higher cash on cash. You're going to be buying it at better values, meaning lower cost per unit. And we're still seeing tremendous growth.
That's great. That's great.
And so we're seeing.
Are you also looking, looking for opportunities as far as to buy? Like I have some people in Chicago, for example, that would, they're very good at, finding some good properties. Do you have an interest in that as well?
In buying properties? Yeah, absolutely.
Yeah. So if we can find inventory for you that you'd hop on that.
Yeah. Now I lived in Chicago for 12 years.
Oh, okay.
So I know Chicago very well, and I just don't invest in Illinois. So Indiana, Michigan, Ohio, Kentucky, Tennessee.
How's Wisconsin?
Wisconsin's great.
Good. I'm from Wisconsin.
Minneapolis, up in Minnesota, fantastic markets.
Awesome.
Illinois as a state, Chicago as a city has some budget issues that I don't believe can be solved because they've tried to and they haven't been able to. And their way out of it right now is property taxes. Yeah. So that's what scares me about Illinois.
Well, what I love about that is you just showed us, Ken, and you really know the different markets. You're sticking in the Midwest and where and certain sections you aren't playing ball in, and so that just tells me you know what's going on and why this syndication model would be good for anybody in the United States to be able to invest with you and to be able to do it in the Midwest.
Yeah, I mean, one of the most important things you need to look at in a market is what is the political and economic climate, right?
Yeah.
What from a legislative standpoint, but also like from a judicial standpoint, like what are the landlord laws, right? How landlord tenant, how friendly are they? What are eviction requirements and things? Because if you invest in California, it's highly likely you could have someone living in your apartment for over a year and not paying you rent, and you're not able to evict. And so we don't invest in those type of markets. We invest in markets that are pro-business and pro allowing us to operate our business in the way that we need to. I mean, we try to treat everybody down to the residents that aren't paying with as much respect as possible and try to get them every program under the sun. But some people just don't work with you, and you can't run a successful business if you have people that aren't willing to pay their rent.
That's beautiful. That's beautiful. Hey, last question, then I think that, for us to kind of get a good overview and understand your expertise and knowledge, that what's some effective ways to raise capital, and can, you help us on kind of that whole perspective?
Sure. Yeah. So I've raised, I've raised probably about $7.5 million in the past, I'd say 8 months for different deals. And, part of it is you got to have some sort of platform. You got to have a way that people can know who you are. Right. So I do a lot of shows like this because I enjoy, my favorite thing in the world is talking about real estate. So this is not work for me, but I also have my own podcast. I host a monthly meetup that is just a real estate networking event. And it started local and now it's global because it's gone Zoom, but, so you've got to have these ways for people to understand who you are and understand your expertise. Right. And then I think from an approach standpoint, once those people are coming to you and saying, hey, I may be interested, you got to understand where those people are at in their journey, because they may not even be confident they want to invest in real estate. So you got to meet them where they are on their journey is the idea. Is if they don't know that they should be investing in real estate, you can't try to sell them on your sweet deal that you have over here, because they don't even know if they want to be in real estate, let alone multifamily, let alone invest with you, let alone invest with you in this deal. Right. So it's you got to start with why real estate. And then why multifamily? Because there's all different kinds of real estate, right? And then why you? Why you as an individual versus all the other people that are out there? And only then, why this deal? Why is this the right deal for them? So I think you got to start where they are, and you got to understand where they are. And the way you understand where they are is you ask them questions. Like my initial conversations, I try to let them talk 80% of the time.
Sure.
And I think where people go wrong is they're like, I got this great deal and I want to tell everybody about it. And they just hit the investor with a fire hose. Yeah. And there's a quote, but it's I don't know, clouded mind doesn't make decisions, whatever it is. You just overwhelm people. Right. So I think if you follow those steps, and then really, like I said earlier, is I really try to approach it from an education first standpoint. And because I feel like if I can educate people in the same way that I was educated, then again, it becomes a no-brainer. And then it's their idea and they want to sign on. It's not me pressuring. That's just a much more comfortable experience, I think, for everybody.
Yeah, absolutely. And, you're just such a kind man. And so you put that kindness into your business too. And people, can reflect that. Well, that's just super. And I so appreciate you being on my show today. Is there anything else that you would like to leave with us? Kind of some closing comments, some closing wisdom, any thoughts you'd like to share?
Man, I'm sure that there are things. I would say if people are interested in getting started with investing, those are my favorite type of investors, because I really, my goal is to get as many people as possible invested in real estate as
Awesome.
possible. I mean, that is the goal.
Yeah.
There's no stupid questions, because this is a complicated process, and it's an unfamiliar process. And I started out as a passive investor, investing with other people. And so I know that it can be uncomfortable going to someone you view as an expert and asking what you feel is probably a very rudimentary question.
Right.
But you've got to get those questions answered, because you got to understand what you're getting into.
Yeah.
So don't be afraid to ask the questions. And yeah, but I do believe that this is why I've dedicated my life to doing this now. I truly believe it is the best way to build wealth on a risk-adjusted basis, meaning the likelihood of your success is highly probable, versus can you get more money investing in moonshots in startups? Potentially, but the likelihood that you're going to go to zero is much higher too. So, these businesses, these apartments that we're buying, our businesses have been operating for 40, 30, 20 years with positive cash flow, right? We're just helping them make more money. And so, it is a fairly risk adverse play. And I think that's what people, when they're first getting in, don't really recognize. And so, that's what I hope people understand. And what I would say is, you can go to my website, kentritter.com. There's resources on the website for passive investor education. And you can also see my podcast there. But if it's something that you're on the fence on and have concerns about, reach out to me. I'm happy to talk through it with you. Like I said, I was in your shoes 4 years ago, starting out doing my first passive investments. And so I get it. And so I'm happy to provide myself as a resource, and you can just get in touch with me through the website or through LinkedIn. I'm on LinkedIn all the time. I'm also on Instagram, but LinkedIn's kind of my home base. You're very easy to find there.
Yeah, that's fantastic, Ken. Well, we thank you for doing that, and that's why you have built over $1 billion business. And that, because you do, you're a fast learner. You got to understand the business, and so it's Ritter on real estate. And check him out, Kent Ritter. Kent, we appreciate you being on today, and helps all of us to realize that we all can become investors. Here's a way with Kent in order to really be able to, with low risk, be able to take, which is just a fantastic asset, real estate, and be able to invest in it and do it in the right markets, in the right timing is now. And so it's just great. And so you know how to get a hold of Kent, get a hold of me. If you need more money, if you need to build more money, I'll help you build the money, so you can give that, invest part of that money with Kent.
So my last word of wisdom about timing is there have not been many better times in history to invest in multifamily and other real estate classes too, but particularly multifamily, just with the shortage of supply, the demand. There's a tsunami of demand for these, and there's just not enough. There's not enough affordable housing for the people that we already have, let alone the people that are going to need it in 5 years. And so it's just a great time to be investing.
That's awesome. So let's go out and do it. Kent, thanks so much for being on the show today. Everybody, we thank you for joining us. And it's really a way now to build your business and build your wealth. And we're here to help you do that. So contact us. Let us know on how we can help you become your greatest possibility. Thanks again. Love you all. Take care. Bye-bye.